Shocks, and this is ShocksCapital YouTube channel. Welcome back to the channel. And if you're new to the channel, don't worry, I will show you around and show you everything you need to know pertaining what we talk about on this channel. We talk about ICT, we talk about institutional trading, beat the market maker, we talk about volatility indices and all the strategies associated with all that and how to make money in the forex market. Today I'm back with a banger, with a strategy on volatility 75. I want to show you this strategy, guys, so you can scale up your trading, you can make money in the market. So what are we using to trade this? And if you can see what's on your screen right now, you can see that we have an EMA 50, the exponential moving average 50. That's what we are going to be using to get our entry signals, and we are going to be using market structure to get our exit signals. So with that being said, let's go right into the strategy and I'm going to show you what it means. So first of all, let me explain what an exponential moving average does. An exponential moving average like this shows us the trend, shows us the entry and exit signals. So what do we see? We are only going to be using one exponential moving average. So the rule of thumb when it comes to EMAs and moving averages is this: if the moving average is below price action, it means we are in an uptrend, and if the moving average is above price action, it means we are in a downtrend, as you are seeing on this one. So how are we going to find our entries? You are going to look for trend number one. And how do you find the trend? You are just looking to find where the moving average is trading at. So as you can see right now, the moving average is below price. It means we are looking for what? For buy signals. And if the moving average is above price, we are looking for what? For sell signals. So how are we going to use the moving average? It's simple. I'm going to show you everything you need to know. So number one, remember, when we are looking at this, we need to understand direction. When you look closely on your chart here, you clearly see that the direction is what is going up in this area, and the moving average is trading below. So what do you need to see? You need to see two things, right? You need to see, number one, the moving average getting broken to the upside and price closing above the moving average. That's your buy signal, right? Did you understand that? Let me retake that. You need to see the moving average going below price, then you need to see price going back above the moving average, like what you are seeing in this one, in this area right here, what you are seeing in this area. So your entry strategy is going to be here. And where is your stop loss going to be? Your stop loss is going to be situated at an area that is going to be integrating what we are seeing on the structure and what we are going to be seeing on the on the market structure of that particular pair. So this is V75. Let's see what it does, right? So before we go further, before I show you examples of this strategy, guys, if you don't have a Deriv account, if you don't know how to trade this, if this is your first time hearing about Volatility 75, I have a link in the comments section down below or in the description down below. Just click that link, put in your email and follow the prompts that it will give you. Create your account and start trading these indices. These indices are available 24/7, are available on the weekends. You can trade anytime from anywhere in the world. So you need to get that account. Click the links in the description down below and come back here and I will show you how to make money using that account that you have created. So number one, what do we see? Price changes directions here. If you are well vested with the market structure, you see how. But today we want to discuss the EMA 50 and how we can take advantage of that to trade and make money for ourselves. So remember, price is trading here and it goes up, right? The moving average comes below price action. Then we want to see what happens in this area or that area or that area. So I'm going to explain everything. Price goes below the moving average, as you can see. So we want a hook, right? We don't want a retest of the moving average. We want a hook. We want price to go below price action like this, and we want price to go back above the moving average. So the moving average in question is the blue moving average or the blue line that you see on your screens right now. So we need price to go below, then go above and close above. And this is where you are going to get to get in the trade or to get your entry at this particular point as soon as that candle closes. And you are going to be using market structure, which is this high or the market structure point to get your take profit or to set your targets, right? So you're going to get your trade here and get out there. So this is what you are doing. And if you are trading downwards, like what price is doing on the next move here, you see that price moves up, hooks the moving average, goes above, goes below, and where is your trading signal or your trading entry? Your entry is going to be just after this candle closes below the moving average, and your stop loss is going to be the next low, as you can see in this example. And if you clearly see, I want you to understand that whenever price touches that moving average, you are seeing a reaction there. So if you look at it closely, you will see that this is very accurate and very profitable if you are trading with proper risk management on V75. So with that being said, let's look at what happened in this area where you see price going above the moving average, that's the hook, and price coming back and closing below the moving average. So this is your entry signal. Your stop loss is going above that hook, above that high, and this is how price is going to go in your favor, and this is what you are looking for as your next take profit. Look at the next signal. You see price going above the moving average, then coming back and closing up below the moving average. Your stop loss goes there, your take profit is on the next low, right? This is your take profit, this is your take profit. And where is your entry? Your entry is going to be what? In this area. Your stop loss is going to be in that area, and you see what price is doing. And you need to avoid things that look like this, where price does not close above the moving average, it just gives you a pin like that and goes. So you need to avoid these signals. We want price that goes on the other side of the moving average and closes on the other side like this. So here we will take, so we don't want a huge movement above the moving average or below the moving average, depending on where we are going for us to get involved. So we want this one where price just gives us one or two candles above the moving average, gives us the confirming close below the moving average like that, and we are going to be taking that to the next low, and this is what we are going to do. So this is what we want to see. Price goes above the moving average like what you are seeing here, and price comes back and gives us an entry signal and things like that. So when it breaks like that and goes and comes below and comes back below the moving average like this, it means that the trend is changing, right? So we don't want to be involved in that. So if you just look at the signals that I just shown you here, we can count how many we have, and let's just calculate roughly how this strategy accuracy seems like. We have the first one, the second one, the third, the fourth, the fifth, the seventh, right? So we have 7 entry signals here. And how many did you win? How many did you lose? Would you have taken 1, 2, 3, 4, 5, 6? So would you have close to 80% 80% success rate? But it's not like that. You see some trades that will fail using this strategy. So don't go all in with all that you have, right? You have to understand that this strategy is not 100% accurate, so you have to trade carefully. So this is what you are going to do, and you have to avoid things that look like what you are seeing here, where price is just consolidating, going above, below, above, below. You need to see a clear downtrend like what you are seeing here, where you have price trading below the moving average, and you have to understand that you're not going to get trades every day. You are going to be very patient with this strategy. You see here, price was just throwing pins to the moving average. And where is your entry technique, or where is your entry signal? It's here, where price goes above the moving average, closes above, comes back, closes below. This is your sell there. This is where you are going to sell, and you are going to put your stop loss above here, and this is the move that you are going to catch. That is that. And you have to understand that you are going to see some trades that fail. You see what happened in this area. You have sold here, but price just retraced and took you out there. So this happens. And if you see here again, it happened where price closes below and closes above, and you'd have bought here, because here you would assume that price has changed directions. You'd have bought here and it would have taken you out. So this happens, and you don't have to worry about that, because it's part of the game. It's part of our trading, and we are not looking at winning every single trade. We want to get the trades that we will get, and we want to maximize on what we have. So this is a strategy that I wanted to show you on volatility 75 using the EMA 50. So this is very accurate, and this will make you money if you follow it. So right now, go to your charts, try to see if I have taught you here works. Let's look at what is happening on this day. This is a live price action, and this is what price did. Goes above the moving average, closes above, right, comes back, closes below, and you're going to get this trade here, and you're going to put your stop loss at this high or after this high. So if you had put your stop loss just above here, it would have taken you out on the next move, but you would have gotten your re-entry at this particular point. You only get one re-entry when you are using this particular strategy, and your stop loss goes above the high, your take profit goes here. So you would have taken this trade and you would have made a lot of money there. And if you're looking at this again, you see that your entry strategy tells you to enter there, and here it tells you to enter there. So these are your entry points using this particular strategy. I just marked it for you so that you can see what we are doing. These are your entry signals, and these are the trades that you'd have taken. So you'd have taken 1, 2, 3, 4 trades on this particular move, and you'd have made a lot of money depending on how you are risking and what position sizing you are using. Remember, if you don't have an account, I have the links in the description down below. Fund your account today and get in touch with me. I'll give you signals, and I can give you mentorship free of charge depending on how you are doing. Cheers, guys. This is what I wanted you to show. Remember to trade what you see. Trade what you see, trade what you see, not what you believe. See you on the other side.